Let's get to the breaking news. Inflation data that has just crossed, and it is better than expected for the month of April, coming in at 2.8%. March had been 3.3%, and the forecast had been for 3%. So it's come in a bit better than expected. Similar trend when you talk about core and services inflation as well. We're able to broaden this discussion out because Paul is here alongside us, as is Lucy, to discuss it all. And Paul, I guess the key point I would say on this is better than expected, lower than last month, but all of the forecasts out there expected it to dip this month before then rising precipitously, not because we haven't felt the impacts of the war so much yet, but because April on April last year was always going to be quite an easy year-over-year comparison.
This is almost a quirk, you're quite right, a statistical function of how we set energy prices. The energy price cap fell in April. Energy prices came down despite what's happening in the Gulf. We know energy prices are going to rise, but it fell relative to a year ago, so inflation has fallen. That's the biggest driver, 2.8%. Remember, this month the Bank of England thought it would be returning to about 2%. But that doesn't mean there is huge inflationary pressure out there. And we can look, and there is much discussion today, of course, of food inflation. And these discussions that you mentioned, that the government has been talking to supermarkets about voluntarily capping the price of core food items, eggs, bread, milk, etc. Idea that's being imposed in Scotland, John Swinney says. The Treasury has been talking to supermarkets. They are not happy about it. There's been pushback from the retailers, and the word from the Treasury this morning, our understanding is they will not impose this, simply because if you're putting a price cap, you're not actually reducing the cost of production, you're just pushing that cost elsewhere. And actually the retailers will tell you what would they prefer is labour costs, energy costs, those to come down, then they can offer cheaper prices. It does emphasise how concerned the government is, and obviously what is coming down the track, people are going to be seeing food inflation. Yeah,
it might be OK for now, but wait for the rest of the year. It's interesting, the stories came from the FT, right, first, and it seems like the government was saying, if you do this, then we'll cut some of the other costs for you, like packaging or whatever.
Yeah, as Paul's saying, there's clearly a disagreement here, which is why our response from the Treasury kind of suggests they're certainly not denying that these conversations have taken place. But, as always with this kind of thing, I suppose we have to wait and see exactly what the Chancellor... She's due to announce a number of things, I think, tomorrow with regards to the cost of living. Interestingly, the Chief of the Food and Drink Federation was speaking to MPs yesterday, really quite damning of the government, saying some departments are asking us to tighten up our packaging and make a number of changes when it comes to fat, salt and sugar in foods. And at the same time, we're being told to keep prices down. So they feel there's a real conflict here. As Paul was saying, this is a government after local elections, all this leadership crisis we've been seeing, really desperate, I think, to show that it's trying to think about the cost of living.
I think the other point on this, which we've highlighted before and we were discussing on Cheat Sheet this morning, is food retail, groceries in this country is actually a pretty kind of competitive business already. It's not a business that needs government subsidies or tax cuts to support it. It is profitable, but profitable in the good way. It's self-sustaining. And profit margin is quite low. Tesco's profit margin last year was about 4.5%. Sainsbury's was a bit lower. And look, that is the key thing I think we need to watch, is the profit margin going forward. If they use a rise in the price of the commodity they sell, food, to slip out increased profit margins going forward, and their profit margin goes from low single digit to high single digit or double digits, then come down on them like a ton of bricks, because that's just absolutely not right. It'd be price gouging, it'd be profiteering. If it stays quite low, then I think you're asking for trouble to sort of hurt the business model of something that's working. You cause bigger problems down the line. Yeah,
this is it, isn't it? Do you think they're going to... I mean, we're going to talk to the government in a moment, but do you think they're kind of backing away from it? Is that the sense you get?
Well, they weren't denying that they're having the conversations, but as I say, we understand this might not go ahead when you see the reporting.
The guidance is unequivocal. We will not impose price controls on supermarkets. So, Wilf, you are right, the supermarket sector is very competitive. You've got Big Four, you've got the discounters. I was checking food prices this morning. You cannot move for price matching. And there was the one cost, when we talk about that they are all facing, huge cost in fuel prices. How does our food get to us? It is moving on the roads 50p a litre of diesel more than it was 2 months ago. It's about £300 million a week for the haulage industry. That's feeding into the food chain already. So some of these costs are unavoidable and will feed through. So it's a debate. It sounds like the Treasury's lost the short-term argument. Clearly, they want to show that they're cutting people's bills.